Hello everybody and welcome to the Cyclical Investors Club YouTube channel. My name's Corey Kramer. Today we're going to be taking a look at Berkshire Hathaway stock. It's a little dark in the office because the sun goes down at like 5 o'clock this time of year and I don't have any extra lights set up in here, so just bear with me. So a while back I made a video where I showed a shortcut on how to kind of evaluate Berkshire Hathaway stock that was super simple. One of the things that I noticed was that I thought Warren was aiming for about an 8% CAGR plus inflation. So an 8% real CAGR with most of his investments, and he was usually pretty successful managing that. Mostly because there haven't been that many investments available that can produce that over the long term. So one of the things that, so after I noticed that, if you start the measurement in like 2015, which is about where I thought Berkshire was kind of a fair value place to measure that. I think one of the things I did to do that was actually go back to like the early 90s and then measure from there. But if you ever want to do this yourself, 2015 is a good starting point. Berkshire Hathaway was about $150 per share then. Okay, so you start with that $150 per share, and you can do a little bit of math, figure out where the stock price might trade if we were hitting that 8% plus inflation kind of trajectory. So that's what I'm going to do really quickly here. As always, this is not individual investing advice. It's just how I analyze stocks, and I just thought this was a good one. And somebody requested that I kind of go back and revisit this. I might have made this all the way back last year. It's been a while. So this is just a little review for them. If you have a request you'd like me to take a look at, usually I actually do earnings-based analysis instead of shortcuts like this, but this one I thought was really interesting because Berkshire's earnings are really kind of tricky to figure out. You need to look through the companies the public businesses that they own, and then see what the businesses that they actually fully own are doing. And there are some people who kind of specialize in trying to cut through all that. And it can be done. I usually try to do it once per year. I've owned Berkshire for nearly a decade now. I bought it somewhere in this dip here for some of my accounts, and then for some of my kids, I bought it here in the Cyclical Investors Club. It started in 2019. We bought it during this March 2020 crash. I haven't had a buy on it since then. I want to say it got pretty close down here, though. So, as a matter of fact, I think some people might have asked me, and I said go ahead and go for it. Even though it wasn't quite where I wanted it. So let's take a look at this and kind of see where things stand. Let's see. I thought I had that pulled up, but I closed it. Okay, that's all right. I'll just tell you, I had a little graph, but basically Berkshire has returned a 12% CAGR over this time. I can probably do this on fast graphs. So 12% CAGR. Right here, 12.1, and inflation's been almost exactly 3% CAGR. So they've got a 9% real CAGR when we're aiming for like an 8% as the baseline expectation for the valuation. So probably going to be a little overvalued here is kind of the setup. And when we go do the math on it, remember, I'm just going to go to MoneyChimp here, moneychimp.com, for their little CAGR calculator. So it was about $150 starting in 2015. The end of this year will be almost exactly 10 years. So I'm just using 10 years. And what we want is 8% CAGR plus inflation, which is 3%. Actually, it was 2.8%, 2.98% exact. So this is going to be more precise than is needed since this is just kind of an estimate. So we hit this 11% CAGR when Berkshire's stock price is at $425. So that's kind of the midline of fair value, where if you buy it around that value, unless something crazy happens with the economy or with Berkshire or something like that, you're probably going to be able to get that 8% CAGR, have a good chance to do it over the longer term from that price. So let's go see where the price is right now. Now, I always like to have a margin of safety and buy like below that level. So this would be like the fair value. So Berkshire's at 463 right now. So it's a little over the fair value mark. I probably wouldn't be adding here. But if it got down, how long ago was it? So even just back in June, it was down around those levels. July, back in July, we were at 425. So it wasn't that long ago, about 6 months, 5 or 6 months ago. And all we need is like another little dip to get down there. And then, you know, you can start adding at fair value. And then if you get a bigger dip, you know, you could, let's see where we were here. So assuming we probably had close to 3% inflation here. Maybe it might have been 4%. We were kind of right at the peak inflation. But so this was back, what, 2 years ago? Assuming we had 3% inflation at that time, it would have been really undervalued, right? Because let's call this 8%, and then with 3% inflation, that would have only been a 5% annual return when we would expect them to do an 8% annual return. So you could see that this would have been like an undervalued time to buy, right? And if you would have bought there, now granted, well, we'll just go, even since it's overvalued, we'll go back to where it wasn't. So right here. So if you buy undervalued, you hold for a year and a half, yeah, or 2 years. You hold for 2 years. That's when you can get these 30% CAGRs. But you have to be patient. I mean, these opportunities don't come along too often. We definitely had one here in 2016, and I think the beginning of 2018 I added to one of my kids' accounts, and then here. So if you bought during these times, you're probably going to be outperforming even the S&P 500. You're definitely going to have gotten good returns. So yeah, that 425 mark is kind of gonna what you're going to be aiming for the next, say, quarter or so. You know, the first into the, and then you can, you know, raise it, you know, another 8% or something as we go. But I wouldn't be a buyer right here. Probably wouldn't be a buyer until minimum 425. But I like to have that margin of safety, because then you can get a big boost right after you buy it, which is great. That's what happened to us here. You know, I think we bought maybe midway through there, and you're able to get an 18% CAGR, right? This has worked a lot of the time. This simple thing has worked pretty much since the 90s. Berkshire isn't one that I actually sell, so I don't really think about it in terms of when to sell it or how overvalued it would be when I would sell. But if you can buy it cheap, then you can kind of just hold it forever, which makes it really nice. All right, hopefully you found that useful. You can search for that other video if you want to see kind of more of the background on. I talk more about the background, how I came up with it, this little metric, and hopefully this fulfills the request of the person that asked for it. If you have a request you'd like me to take a look at, usually I do more earnings-based analysis, and for cyclicals I do historical price analysis, and just let me know in the comments section, and I'll get the ticker on the whiteboard behind me. Eventually I make a video. Thanks for watching. Later.